Certainly not financial advice. The guy in my basement, tapping the joint, taking a look at the markets. 2020 COVID crisis. We haven't got back down to it. We haven't got back down to the 200-week moving average. I think we're going to blow through it in a recession here. Interest rates are kind of bobbling around up and down. They're kind of stuck where they're at. Inflation is going up. Gas is still high. Some commodities are paring back a little bit, but still lots of issues out there. They say the jobs market is looking really good. That's very interesting to me. Real estate is a very interesting one. In certain pockets, we have it cooling off. In average areas around America, it seems like we're kind of still full steam ahead. It's really interesting to me because we're different from 2008. People aren't as over leveraged. Lending standards are completely different. A lot more people have actually equity in their homes. They're not really underwater. So I'm very interested in the real estate stuff we're doing and pushing through that. I kind of think like, the past 3-4 years, you haven't really been able to find real estate deals, good deals, without having to take an extreme risk. And I think those deals are going to start to come back quietly. Shh, don't tell anybody. Shh. We're already working on our next flip, a little off-market deal that we put an offer in on. Called the guy back yesterday, followed up. Hopefully we get it. I don't know. Hopefully we get it. It's going to be a really nice project. I mean, if we get this project, it's going to be nice. Top notch, $500,000 home. And for Cincinnati, $500,000 home's really nice. I guess I should preface that. A $500,000 home in Denver is a fucking shithole. A $500,000 home in Cincinnati is a really nice fucking home. Falling down a little bit. It seems like we're chopping around here. Like these are weekly candles. So we bottomed 1, 2, 3. We're 4 weeks here where we're kind of chopping around, starting to consolidate. If we could consolidate just above this 200-week moving average on both the SPY and the QQQ, this would be very interesting here. Things do move quick now with information. So maybe this quick movement down on the S&P 500 and the NASDAQ were everybody pricing in a recession, and now that the recession's here and we know the numbers are here, possibly we just chop around as we get through it. One thing I did note though, I was watching The Compound, a really good podcast. Compound and Friends comes out every Friday. It's with Josh Brown from CNBC and Michael Batnick, and they have on guests from the traditional finance world. And one of the charts they showed that I thought was really interesting, thinking of a recession here, but it hasn't really hit the numbers, and we haven't really seen the next drawdown where earnings from companies start to get revised down. Like right now, companies are still reporting record profits and earnings and margins. I think there is a point in time here, if we do hit a little bit of a recession and people stop spending, that those numbers need to get revised down and we're going to get another leg down in the market. That's kind of my prediction. And the chart that they showed of that happening in 2008 and around 2000 was very interesting. It's like there was a couple quarter lag, like a 6-month lag, until those businesses on their quarterly numbers started like reporting, okay, we're going to actually do worse than we did, quarters before or a year before. So I thought that was very interesting and insightful, and I think we've come down here on the okay, recession's coming number, but the actual data hasn't really hit yet, and once that data starts to really come in the next 3 to 6 months, I think that's where we get the next leg down. Now, not financial advice. Dude in my basement, drinking coffee, smoking a little bit of cannabis, that's just my prediction. I'm just dollar cost averaging my way into everything, not making any extreme bets, including Bitcoin and Ethereum. We're trying to just dollar cost average our way in. They've both broken below, Bitcoin below its 200-week moving average, Ethereum below its 200-week moving average. I don't know why I drew that line there. And it seems to be just going down. It's making lower lows each week, can barely hold on the green tab. So I don't know. I'm not like in a rush to buy any crazy crypto assets right now. They can all hang out and do their thing for now. Catch me on the next bull run when things turn around. I'm looking for things like cash flow, SPHD, general market stuff. Now, that's not to say I'm not buying Ethereum. Every one of these tick marks on the daily chart over here is a buy on Ethereum. So when I do have some extra dollars or two, a little bit of change, I do dollar cost average my way in. I'm just not putting big chunks of money to work at the moment.